So, hello, good morning, good afternoon, depending on where you are in the world and when you are watching this. I am Bernadette L. Harris. I'm an award winning small business accountant with the BTB Advisory Firm, and I am committed to keeping small business in business. And so today you are watching one of my 15 minutes of fire sessions, and these sessions are quick educational sessions to help you be better in business, right? To keep you in business. So today I want to talk about something that I found to be a major issue when it comes to businesses either starting the right way or running their businesses the right way. And this is a topic of entity selection. Which entity makes the most sense for you? Most people are making decisions based on what they see on social media, what their friends are doing, what their cousins are doing, and not really seeking the advice of a professional to decide what is the best entity type for them. So, we're going to talk a little bit about it tonight. Um, One of the things that I wanted to share out of the gate is how important it is to understand that entity selection is not one size fits all. Entity selection is a process that has to take into consideration your entire situation. So, what do I mean by your situation? When I say your entire situation, it is going to take into consideration the type of business that you are in, because the type of business that you are in may determine which entity type makes sense versus which entity type does not make sense. We also want to look at what your income potential is, depending on how much money you make will drive the decision as to whether or not one entity is a better fit over the other entity. You look at marital status. Are you married? And if you are married, do you and your spouse file a joint tax return? Again, it is looking at the full financial picture and understanding that this entity selection is going to impact your tax return. Is going to, if you are married, it's going to impact either your joint or your separately filed tax return. So you have to take those things into consideration. Then the other thing is you have to think about what is your overall financial strategy of your business. What is the goal? What is it that you're trying to do out of the gate? What's the short term goal? What's the long term goal? All of these things are things that you have to take into consideration. So I'm going to talk very briefly about the different entity types, and then I'll just share the types of businesses these entity types work best for. Keep in mind that this is very general information, and even though I'm an accountant and I'm sharing this information, it is still advised that you have a conversation with your accountant, or if you don't have one, then we can talk, right? But it is very much advised that you have a conversation with a professional who is very familiar with your situation. So most people say, should I do an LLC? Should I do an INC? Should I not? To LLC or not really depends. It depends on where you are. For instance, in the state of California, an LLC costs like $800 a year. And if you don't, whether you make no money or some money. So doing an LLC right out of the gate in California might not be a great idea. And this is again why you want to talk to a professional, because a lot of people don't know that. And I've had clients where they go and they just set up an LLC because that's what they said to do on Instagram and Facebook, right? You set up an LLC, and then when that annual renewal comes and you got to pay $800 for an LLC that didn't make any money, it's hurting, right? So you want to make sure that you want to look at your state laws and see, what are the requirements in my state? How much is it going to cost me to have this LLC? And again, what is my earning potential? Am I even going to be making any money, or is this something that I'm building? If it's a business that you're building and you're in a state where the LLC renewal fees are pretty high, you may want to wait. All right. So let me just back up, and I'm going to talk about the different entity types, and then I'll circle back and talk a little bit about the difference between LLC and INC. So the first entity type that I want to talk about is a sole proprietorship. Sole that by definition means one. So it's one owner, one proprietor, sole proprietorship. So you can't have a sole proprietorship with your spouse, your siblings, or your best friend. Sole proprietorship means one. There's one owner in the business. This is the person who takes all the profits. This is the person who takes all the responsibility, all the liability. Everything is on the shoulder of that one person. Now, you may have employees or contractors that actually work with you in your business, but when it comes down to ownership, sole proprietorship means that you are the only owner of that business. And so when you are a sole proprietor, that from a tax perspective, that means that you don't file a separate tax return. It's just an additional schedule on your regular tax return. So you file a 1040, and when you're a sole proprietor, you add a Schedule C to that. So the businesses that I've seen that benefit most from being a sole proprietorship are usually businesses like multi-level marketing, direct sales, those types of businesses, right? Those businesses, in my opinion, are the best entities for sole proprietorship. Also, a business that's just getting started. If you're just getting started, you're not really certain about what your income potential is, then you may want to start out with a sole proprietorship. The beauty of starting that way is you don't have to stay any of these entities, you don't have to stay that way. So that's the sole proprietorship. Then you have a partnership. Partnership is, by definition, that means that it has two or more owners. So a partnership would be a business that has two owners or three owners or 10 owners. A partnership can have unlimited owners. When you have a partnership, multiple people own it, and it is taxed very similarly to a sole proprietorship. The difference, however, is that you're splitting your profits between that. So when you have a partnership, from a tax perspective, that's a separate tax return that has to be filed before you can file your personal tax return. The form is called 1065. So your 1065 has to be filed before you can file your personal tax return. And when you have a partnership, partnerships are what's called pass-through entities. And I'm giving you a lot of information. I don't want to fire hose you, but I do want to make the best use of your time because I appreciate you watching, whether you're watching live or a replay. And so when you have a partnership, you file this information return. And this information return means that the entity itself does not pay taxes, but the owners or the partners actually pay taxes. So you file a tax return. The tax return says partnership ABC made $100,000, had $50,000 in expenses, and they had a $50,000 profit. And these two people are the owners of this business, and they're 50-50 partners. And so one partner will claim $25,000 on their personal tax return. The other partner will claim $25,000 on their tax return. So that's the way a partnership tax return works. Partnerships work really well in like real estate type businesses or businesses. I find that real estate are usually the businesses that I recommend do a partnership, because don't put property in an S corp. We'll talk about that, right? So that's the partnership. Then you have an S corporation. Everybody's probably heard of an S corporation. S corporations are sexy. People are always talking about S corp. Social media tells people that everybody needs an S corporation, and I beg to differ. Now, I will start by saying S corp is my favorite entity type. 90% of my clients are S corporations because it is a great fit for the right business owner. So service-based businesses, which is primarily who we work with, service-based businesses are ideal for S corporations. However, S corporations should be businesses that are generating a significant amount of income. And significant is relevant. I understand that, but if you're a business that's generating like $8,000 to $9,000 to $10,000 a year, you shouldn't be an S corporation, because in that situation, being an S corporation is going to cost you more than it benefits you. S corps are ideal for businesses that have steady cash flow, good income, because the other piece, the part that social media does not tell you, is that when you are an S corporation and you are an owner that works in your S corp, you have to pay yourself a salary. And so you want to Make sure that you have a business that's generating enough income to pay yourself a salary. So that's the S corporation. C corporation is very, very different. Oh, let me back up. S corp is also a pass-through entity that is taxed the same way as the partnership. So I'm not going to repeat all of that because I only have like 4 more minutes and I want to get through this. But again, it's a pass-through entity. C corporation is not a pass-through entity. So it is the only entity of the 4 that pays taxes on its own. So a C corporation tax return looks like 100,000 in income, 50,000 in profit. This 50,000 in expenses, 50,000 in profit. The entity will pay taxes on that profit. So when you are a C corporation, you don't have to pay taxes on the profit like you do with a partnership and an S corporation. Now, I told you that 90% of my clients are S corps. I have 3 clients that are C corps. C corporations is not as common in small business owners. So there are situations where I recommend C corps, usually when there is high income. My 7-figure businesses, we definitely talk about whether or not it's time to be a C corporation. A business where there may be lots of employees and you want to offer attractive fringe benefits. And so C corps allow you to offer some benefits and fringe benefits that are tax deductible and things like that. And so that's an example of when, those are the types of businesses, usually high earning income businesses. The other type of business that may make sense to be a C corporation is a business that's looking to potentially get investors or go public or something like that. So sometimes out of the gate, you may go straight to a C corporation because you're positioning yourself for those things. And so that's, again, very, very broad information. So now let's talk about LLC, INC. The LLC is my favorite. And the reason that is my favorite is because I like to think of the LLC as a chameleon. And a chameleon is that little reptile-like animal that will turn in whatever color it needs to turn just to camouflage itself. So if it's on a brown branch, it turns brown. If it's on a green leaf, it turns green. And the LLC, in my opinion, is very similar to that chameleon because it can be whatever you need it to be. The LLC can be taxed as a sole proprietorship, a partnership, a S corp, or a C corporation. And the reason that I love the LLC, if you're in an LLC friendly state, the reason I love the LLC is because you can start your business as an LLC and be taxed as a sole proprietorship. As your business is growing and you start getting cash flow and you're able to support a salary for the owners that are working in the business, then you can switch to an S corporation. Nothing changes. Your EIN doesn't change. Your business name doesn't change. You don't have to change your bank accounts, any of those things. And so the LLC just gives you the flexibility to change as you need to. So actually for my business, I started out as sole proprietorship. I went to an S corporation, was an S corp for a very long time. And now I'm a C corporation. And as a C corp, all those changes that I made to my LLC never change anything with my bank accounts, my EIN numbers, or anything like that. And so that's the reason I like the LLC, because it has that flexibility. If you choose to be an INC, the only 2 choices you have are S corporation and C corporation. So I know that I just gave you guys a whole lot of information. I hope that the information is helpful, at least enough for you to start thinking about which entity type makes the most sense for you, or at least to give you enough information to make a really good decision. So I see a question. What's the pitfalls of holding real estate in a C corp? Great question. Thank you for asking that, because I did mention that earlier. And so the reason that I don't recommend clients put property in an S corporation is because if you ever want to take that property out or transfer that property to someone else, you create a taxable situation. And so partnerships are just more friendly when it comes to real estate, as far as bringing real estate in and out. From a tax perspective, putting property in an S corp is not a good idea. The other reason that I don't like to put property in an S corp, and I'll use Georgia as an example, Georgia has a net worth tax. So in Georgia, you don't pay taxes on an S corporation, but you do pay net worth tax on an S corporation. And then if an S corp owns property, that is considered an asset, and they will tax that asset. So years ago, probably about 15 years ago, I had a prospective client come to me, and her previous accountant had set her real estate investment portfolio up in S corps, and she didn't make any money. Like she had a loss the entire year, but her net worth, because of that net worth tax, I think she ended up having to pay the state like $1,000, and she was appalled by that. And so those are some of the reasons why I don't recommend putting property in an S corporation, either a partnership or a sole proprietorship. And you could put it in the LLC and protect it, but from a tax perspective, putting it in the S corporation will cause you some problems when it comes to taxation. So again, thank you so much for being here today in our 15 minutes of fire. If you know someone who could benefit from this lesson, please share the link to the video. And I am here every Wednesday at 8:30 p.m. Eastern Standard Time, sharing something that is going to help you in your business. And again, if you want to know more about my company, it is the BTB Advisory Firm, btbadvisoryfirm.com. Check us out on the website and see if our services are a fit for your business. I will see you guys next week. Thanks for being here.